Hi, I'm Calvin Rose, and welcome to this week's Market Minute. Please hit the like, subscribe, and notification icons so we can continue bringing you these insightful sessions on what's happening in the markets. Let's jump right in and take a look at what happened today in the markets and then talk about this week versus last week. Things have moved along quite a bit since then. So today, another negative day for the most part, although the Dow Jones Industrial Average held up pretty well. Very negative day for the NASDAQ 100. So you can see here how gold went up today, and it's actually continued going up in the aftermarket, along with crude oil prices went up as well. And on the bond side of things, interest rates really jumped right across the board here. So interest rates went up, causing treasuries to fall in value. So what does that turn out to do relative to last week? Well, last week we were in a situation where we were at moderate risk. And if you remember last week, we talked about the fact that we have some other indicators. The oscillators were looking a little weak, but some of our other indicators were looking better. I'll talk about those in a minute. But let's see where we're at this week. So this week, we're at high risk. So risk has increased in the equity markets. Now, why do I say that? Well, for you data nerds, later on, I'll go through the oscillator charts and we'll get into the details of that. But and they look worse for certain. But there's another indicator that we use called equity versus safety. And last week, you can see that the NASDAQ 100 was ranked number 1, S&P 500 2, Russell 2003, and the Dow Jones Industrial Average 4. So equities were top ranked last week, with cash sort of in the middle, gold almost near the bottom. This week, things have changed quite a bit. So yeah, the Dow Jones Industrial Average has moved up to number 1. Cash has moved up to number 2. Not a good sign for the rest of equities. The S&P 500 and the NASDAQ 100 have both moved down substantially. Gold has moved up. So this is a flight to safety in the form of gold. And you'll see that TLT and EDV, the long treasuries, have moved down since last week, meaning interest rates have gone up. People are moving into gold because they're afraid of what's happening in Ukraine, and they're afraid of what's happening with interest rates. Let's also take a look at the natural growth selections from last week versus this week. So if you remember, I talked about the fact that we use natural selection to rank a very large pool of stocks. And in one case, we set up what we call the success factor to look for very high growth stocks. These are the stocks you would typically find in Cathie Wood's ARK Invest ETFs. And last week, Lockheed Martin was number 1. This week it still is. And you can see how some of them have stayed up here, some of them have shifted down, and so on from last week to this week. In terms of stable stocks, these are stocks where we look for stable growth. All of these, I think pretty much all of these pay dividends, although that's not a criteria. But you can see that the list hasn't really shifted around that much, aka they're stable stocks, right? Now let's take a look at gold. Now gold risk a week ago was high, and you saw that in the equity versus safety rankings. Gold was pretty far down the list. This week, it has moved up to low risk and looks very good. In fact, we put a small amount of gold exposure into our clients' portfolios this week. On the interest rate side of things, a week ago, interest rates were at high risk, and this week they are at very high risk, so they continue to become more risky. In terms of cryptocurrencies, for several weeks now, cryptocurrencies have been at very low risk, but this week they've shifted to high risk. In fact, I went to all cash in my cryptocurrency account a couple of days ago, actually. Okay, so let's take a look at the natural selection for the top cryptos. Last week, VeChain was right at the top, still is this week. Solana was number 2, still is this week. Dogecoin has moved up. ADA's moved down a little bit. Ethereum's still in the same spot, and so on. But what you'll notice here is last week, cash, and we use these cash positions just to kind of see where the risk is with cryptocurrencies, along with the oscillators that I'll talk about later. But you can see how cash is moving up here. So this is not a good look for cryptos. We'll see how this plays out over the next week. Now the moment all you data nerds have been waiting for. So let's jump into these charts with the oscillators and look at what's been going on, kind of the undercurrents of the market. So you can see here how the price of SPY dropped, kind of bottomed out here on March 14th, tried to rally, and has been kind of weak since then. And you can see that here in the buying pressure. Buying pressure went up and then has been fading ever since fairly early on in this rally. And the selling pressure has been increasing here. So this is why we moved the risk level of equities up, along with what you saw in equity versus safety. Let's look at the 10-day chart. Same look, not a good chart. If we look at the NASDAQ 100, again, same picture, right? You had it falling here into, again, March 14th, a nice rally attempt which faded quickly and has fallen off. And you can see here that the buying pressure has fallen off drastically, in fact, more quickly than the S&P 500, and the selling pressure has gone up. The same, again, with the 10-day chart. So now let's take a look at gold. So gold back here started fading, and if you look several videos back for Market Minute, you'll see I talked about the fact that it looked like it was losing its luster back here, so to speak. But you can see that the selling pressure dropped here, buying pressure came up, but now they've crossed again. So we're starting to believe that gold might actually try to rally again. And if you look at the 10-day chart, you get the same thing here. It kind of weakened back here, but now it's the buying pressure is above the selling pressure. But I don't like the way this is falling off. Let's see where this goes from here. And for interest rates, they've looked pretty bad. They had a moment here where they looked like they might do something, but you can see the price has just been mainly declining here. And you see that here in the buying and selling pressure. So the buying pressure tried to sort of make a run here, but fell off really quickly. The selling pressure has come up and is now stronger. So this is why we've put interest rates at a higher risk. If we look at the 10-day chart, same thing. Now let's take a look at cryptocurrencies. So cryptocurrencies, really kind of held up well back here when the selling pressure was higher. I was kind of amazed at how they held up. Then we had a nice rally here, but it's falling, it's fading, and you see that here. The buying pressure came up and then faded, and the selling pressure has come up. You'll see the same thing in the 10-day chart. So right now for cryptocurrencies, they don't look good. As I mentioned earlier, I took all of my cryptocurrency holdings and put them in cash for right now until I see this reverse. If you like these videos, please hit the like, subscribe, and notification icons so we can continue bringing you these Market Minute episodes and reviews of the market action each week. That's all for now.